This is an Uncovered Japan company research report on Taihei Dengyo, ticker 1968. Taihei Dengyo builds and maintains the power plants that keep Japan running. The central question is whether its nuclear credentials, high-margin maintenance business, and growing order book can justify a stock that is already priced roughly fairly against its closest peers. At 13.5 times forward earnings and 1.28 times book, Taihei is not priced like a forgotten contractor. But its economics are not those of a general contractor either. Before judging the multiple, it helps to understand the service mix, the installed base, and the backlog that support the case. Taihei is a specialist plant engineer rather than a broad construction company. It works on power generation equipment, large industrial plants, instrumentation, and piping. The model matters. Construction establishes the relationship and the installed base, while long-lived operation and maintenance work creates the recurring, higher-margin revenue stream. Taihei's most difficult-to-replicate asset is its track record in nuclear and power plant work. It has worked on 30 of Japan's 35 nuclear units, and with all 10 regional utilities. In safety-critical maintenance, accreditation, site knowledge, and trusted crews matter more than a low bid. The trade-off is that this people-based moat also makes skilled labor the key operational constraint. The segment split explains the investment case. Maintenance and operations contributed 69% of fiscal 2026 sales and earned a 16.6% margin. Construction was 31% of sales and earned 6.7%, with much more project risk volatility. The build then maintain flywheel turns the lumpy project business into decades of sticky service revenue. Revenue reached a record 141.7 billion yen in fiscal 2026. The more important trend is in operating profit, which compounded at roughly 9% a year over 5 years, as the mix shifted toward maintenance. The report's practical message is to watch margins and mix, rather than treating the company as a simple volume-driven contractor. Taihei's balance sheet is unusually robust for a construction-linked business. Its equity ratio reached 72.1%, with 35.4 billion yen of cash and effectively net cash after debt. That strength gives the company room to fund working capital swings, pursue capability acquiring M&A, and keep investing through uneven project cycles. The report also identifies a genuine risk. Operating cash flow was negative for 3 consecutive years despite record operating profit, because large projects lift receivables before cash arrives. The balance sheet can absorb this, but receivable days and the return to positive cash flow are key tests of whether the growing backlog is converting into healthy economics. Taihei's path toward 180 billion yen of revenue in fiscal 2028 and 200 billion by fiscal 2030 starts with a 181 billion yen order backlog, up 44% year-on-year. That makes the opportunity more tangible than a forecast-only growth story. The execution question is whether the company can recruit and deploy enough skilled workers to convert the order book. The macro backdrop is unusually favorable for a power infrastructure specialist. Japan's policy has shifted toward maximum use of nuclear power, while thermal replacement, data centers, and semiconductor capacity add demand for reliable power assets. The report estimates that nuclear is about 34% of end market exposure, but diversification across utilities and industrial customers remains important. The valuation is the report's honest soft spot. Taihei has re-rated from roughly 6 times forward earnings 5 years ago to 13.5 times today, above its 9.8 times 5-year average. That is not necessarily excessive for a higher quality maintenance business, but it means future returns depend more on earnings, cash conversion, and execution than on another easy multiple expansion. Taihei Dengyo combines a rare nuclear track record, a high-margin maintenance flywheel, a strong balance sheet, and a policy-supported order book. The risks are clear too: labor capacity, construction cost discipline, receivables, and nuclear timing. This is a quality power infrastructure story priced around fair value, so the evidence to watch is the conversion of backlog into profit and cash. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.